Welcome to another edition of Roadhouse Live. We are live. Today is June 5th, 2023. We are at the halfway mark, give or take, kind of, sort of, on the year that is 2023. How do you feel halfway through the year?
How do I feel halfway through the year? I don't know. I guess I don't really think of it that way.
If you were to summarize the first half of the year, what word would you use?
Fuckery. I don't know.
It's a hard one, isn't it? It's a hard one. Sorry to make
41,
you think.
48.
40. Oh man, yeah, that too. All right, so let's get into some of the things that matter. OPEC is cutting barrels by 1 million a day. They're probably going to look to be making more cuts, just depending on how the global economy kind of recovers and moves. China is a massive piece of that overall puzzle. And we have a lot of people in and around China trying to do good deals with China. In addition to that, we're basically entering very close to the dark period with Fed speakers, so we cannot expect to have a lot of market moving Fed speakers up until now, and FOMC, which I believe is next week. So with that being said, everybody kind of has this overall anticipation that they are going to use a P word, and that P word, Bender, is pause, not pivot. Pause is the P word, not pivot. Or skip, if we want to use the S word. Either way, it's not pivot. So that kind of brings us back into the overall conversation. Now that we're done with the debt ceiling, now we're done with all the, let's call it fake theatrics coming out of DC as far as will they, won't they? They did, it's done. Now we can get back into the normal business of actually looking at tickers and not looking for an overall Armageddon play that's going to bring America to its knees. So, yay, America was not brought to its knees. So coming into the day, we have a couple of things going on. We have NVIDIA pulling back a little bit. Actually, almost all of those tickers that ran off of that NVIDIA ER, they're down. So Adobe's down a little bit, NVIDIA's down a little bit, AMD's down a little bit. Anybody and everybody that was associated with the ups, they're kind of a little bit red. Tesla, nicely green. Apple, nicely green. Apple has an event starting today, and I believe it's 1 o'clock today. They're going to do some presentation and whatnot as far as what they have going on with their new releases and products. Which should be interesting. The headset is said to be like the next wave of greatness. And I'm sure that we can expect to hear the word AI uttered, 8.7 trillion times during the speech, which, who knows what that does for some of these others that ran, and who knows what that's going to do for Apple. As we've seen historically, Apple usually sells off during these events and post the event. So let's keep a close eye on that at the same time. Overall, flow has been steadily bullish with some odd and curious bearish lines coming through. Now, what we continue to see on average is larger put writers. Okay? That usually indicates, or we're going to melt higher, grind higher, work our way higher. Until we start seeing large call writers, I think that it would be in everybody's best interest to continue to look to buy the dip as opposed to trying to find the top that is going to create Armageddon for the markets. Now, these Armageddon moments, these moments of big drawdowns, that kind of stuff, for the most part, they're not really predictable. I know through the years I've caught a couple of them properly, and I know that I have not caught a lot of them properly. So I think that at the end of the day, when you're looking at flow, when you're looking at the charts, when you're looking at all these things, yes, are we extended? Sure. We also extended to the downside for several months. This rally can last for as long as it actually wants to, barring some type of a headline. So, with this being said, kind of cutting into the things that matter, these charts are going to be important. I see a big old bull flag that can still pull down a little bit more and maintain the flag, but we're coming into open here and we're not looking too shabby. What you got?
All right. Yeah. Let me throw this chart on here. Be able to see that now. All right. So what we're looking at here is a 15-minute. And what you may notice first, I got a couple of trend lines here. The top, this upper trend line here is the top of that megaphone pattern that we've kind of been watching. Yesterday we popped, or last week on Friday, we popped above it and just kind of, used it as support. But see, this was, let me zoom this back out a little bit. Zoom in and scroll back. Okay, so here is this lower trend line right here. This was the top of that megaphone that we were watching, acting as resistance right in here. We did get above it and kind of play around above it for a little while. I have another trend line up higher, which if I zoom out, you can kind of see where that came from. That should be visible. And it kind of just depends on where you draw these trend lines from and what you use, to create them. Both of them had visible points of contact. So I put them both on there, but right now what we're looking at is just that higher, that second one, that higher one. So you can see where it started, where we came in contact with it, and extending that out, to where we are now. See, we popped above it, came below it, used it as resistance, popped back above it, used it as support. So I'll be kind of watching that, trend line as the week progresses. I also have the London session high put in this little double top right here. And I've got the Asia session low marked out. So the London session high, that double top 42.90, 225. And then you have that trend line just below it. And then you've got the Asia session low down here, 42.80 half was that low. So, what I'm looking for this morning, tomorrow, kind of however this plays out, I'll keep these lines on the chart. But, I think if I'm looking at how I'm framing this up and what might give me some indications of, direction, where we're going, where we might head. If we can get through this little double top here, that London session double top, as long as we don't wick it and pull back down, if we can get through it and use that as support, I think that sets us up for, I think we'll get through Friday's high, which is that 42.97.75. We get through that. We have this old fair value gap here up to 43.12 half. And then we have these extensions up here. The orange lines that you've got here that you see on the chart, those were the 1414 extensions off the previous up moves. And the red lines up here are the 1618 extensions. So if we can get through, 4,300, kind of hold above, that puts the target for me up here, 43.25 to 43.29. That would kind of be the next target that I would be looking for over 4,300. And on the flip side of that, if we find ourselves below that Asia low, so 42.80 half, 10 handles down from here, then you can see this 15-minute fair value gap here. And I think this is kind of that must hold, near term must hold area down to 42, starts at 42.78 down to 42.70, 275 would fill that in. If we find ourselves below that, then, we'll probably be pushing back down under 42.50 and then 42.35. And this 42.35 area, just below that is the top of an old new week opening gap. So the reason that's significant is because, we like to trade new week opening gap to new week opening gap. So, if we find ourselves, like I said, below that 42.72, then at that point, if it doesn't hold that, at that point, it's probably going to trade back to that old new week opening gap. So under 42.72, then we start targeting this 42.35.75, and there's 40 points in there, right? Doesn't mean we'll go straight there, but that would be the target below 42.72. So that's kind of how I'm framing this up. Again, above that London double top high here, if we can get above that and establish support there, then we're looking for 43.12 half, and then up to these extensions at 43.25.25. Below 42.72, then we're looking for an entry, or even below that Asia low, look for an entry into a fair value gap, kind of head on a swivel if we get 42.68, but ultimately we'll be looking for a push back down to that old new week opening gap, 42.30, 42.35.25. So that makes sense. I mean, that's really kind of how it's framed out. I agree with you. We kind of got this bull flag set up in here, right?
Yeah.
And as long as that continues to hold, then cool. We go run these extensions up here.
Yeah, and there's still a lot of room on that flag, even if it wants to pull down in order to still maintain its flag, if you will.
Yeah, again, I think that 42.72 area, I think, is what we'd like to see hold, right? Mm-hmm. But realistically, if I go, okay, from this move to this high right here, the midpoint of that being 42.38, right? So, even if it were to pull all the way down to 42.38, I could see it pulling down into that area and then holding because that would be, that would be a 50% retracement of this most recent move up. So even that doesn't look, wouldn't look horrible, but, I think below 42.72, which was that 15-minute fair value gap, then I think there's a good chance that they take it, that 50% level, also right there being the top of that old new week opening gap. Like maybe they pull it back down here to give that test of previous resistance to see if that has become support.
So refresh my memory here, Bender. Did we break out and through that megaphone thingy majigga to the upside? Or we still
did. We're just still, we're still within, we're still within a couple handles of it. So
right.
5. So have we really broken it and left it behind? Well, not decisively, not yet.
And usually we retest.
We're right there.
We retest, breakouts like that at some point, right?
Yeah, which we have. We're sitting here, bouncing around above and below it. So, I don't think that it is necessarily been decided yet. Just not from a technical perspective, but looking at the way that the chart's set up, maybe we get sort of a little higher sideways type stuff today. Ideally, we would get that followed by Tuesday low, because Tuesday low or lower, then I think sets up a possibility for rally late Wednesday, rally Thursday, and put us up into that, maybe even above these fibs, but up into that 43.30, 43.40 area by Thursday, early Friday. That's just kind of, but I'm like, okay, how might this play out? Right. I don't know what they're going to do with it, but if I kind of try to start to put something together as to, okay, what might be the scenario here? Ideally we would get a pullback, a decent pullback, Tuesday, late in the day, to start to look to get long again.
No, that's interesting because it's like we're fairly light on data this week. It's like we have data 15 minutes after open, and then 30 minutes after open as far as PMIs, which, if we go back 6 months to a year ago, those numbers were very, very important as far as how they would move the market. Recently, they really are not having that much of an impact with any type of continuity as far as how the market reacts to the data, as far as how the tape actually reads. So it's like we are data light this week. I think the biggest thing that we have is today, and then I think Thursday we get jobless claims. That's really all we have. There is big data coming out of Japan, and Japan has ran really, really hot. They were up heavily again last night, I believe. So it's like we continue to get these pieces that are telling us that for the most part, people continue to look to the upside. Continue to look to the upside, especially when we start looking at the global markets. And we said it once, we said it a million times. The U.S. markets are still lagging global markets substantially. When you start pairing these things where they are up against their relative highs, still really, really lagging overall the American markets, which is interesting because American markets and the companies within them pretty much drive the overall, I don't want to say sentiment, but it's like they're extremely important as far as, the overall feel and overall understand of how the world is kind of operating. And we continue to put out good ERs. And so if you look at it from that standpoint, there's a lot of room to the upside, which it's like, it's tough because you go back and you look at these charts and you're like, well, we should have pulled here, 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 and here. And we haven't. We've continued to go. But I think that goes back to just relatively, from a relative standpoint, we're just not there yet as far as being overextended from a valuation standpoint. That's all I can piece together with it. But thank you for showing that.
We were on some tickers, obviously, right? And I think, we did see, like we talked about last week, we did see some money going. I mean, the Russell was just on fire on Friday, right? I think it was up. I think the ES, when I was looking at it, it was up like 1.5% or 1.6% at one point, and the Russell was up like 3.4 or something. So
yeah,
we did get some of that money flowing into other areas of the market. What I want to be aware of and stay
with the Russell is tough because I'll go ahead. I want you to finish your thought.
Just like what I want to stay aware of and be mindful of. Again, those orange lines, those are the 1414 extensions off these previous moves. I would love to see us get through those and fire up higher into that 43.30 area. but it's never a straight line, right? When like I say never, and obviously last week we had some pretty straight line moves on Thursday and Friday, but there were still pullbacks along the way, right? And like we just talked about earlier, a pullback into that 42.35 area, you know, nothing wrong with that, right?
Mm-hmm.
It would still be fine, but we have to realize that, yeah, we are up against, you know, some of these extensions. And, you know, when I zoom out a little bit, like let's look at a 4 hour real quick. When I zoom out a little bit, it's like, okay, now we're getting into kind of the bigger picture view of things, but you know, it's like, okay, we were down here at 38.50, 38.55, ran up to 42.50, came back down, retested that 38.50 area and held it, and then pushed up and ultimately, you know, through those previous highs. Okay, so they took all that out, right? It's like, you know, conceivably, if we stay kind of within this cycle, you know, there at some point, it's like, okay, where do we come back to? How far do we pull? You know, a retest of that 42.30 would look fine, but at the same time, you know, if we end up below that and back under 4,200, then, you know, damn it, 41.50, 41.48.
Right.
Like,
Well,
just keeping all of that in perspective.
I think there's a couple of things. It's like the Russell is not the ES, like in any capacity. It's like those are like one was down and getting beaten over the neck for a reason. There's nothing really exceptional pinging around in the Russell, nor was there a story. So I think a lot of what we saw late in the week on Friday was a true covering rally. Like a lot of covering over there. What's interesting about what you're showing is, so we have very little data this week. And then next week we have, I think it's OPEX, we have FOMC, we have CPI. Next week is just, it is battle royale when it comes to data and messaging and I put it in quotation marks, guidance. As far as the overall market. So next week is going to be massive. It's like we've seen these pit bull lows going into these things on, let's say, Thursdays, right? So we get that Thursday, Friday pit bull low, and then we kind of rally up and through. So I think everything that you're pointing at is picture perfect, at least from a calendar standpoint, as far as where and how we can pause in through here, especially with your purple box up there. That would make a hell of a lot of sense if we go nibble and then kind of, you know, retrace a little bit. Could be.
I think that the fact that we haven't taken 4,300 yet, to me, leaves some room near term. Like, we're going to get that close to it. And we're not going to at least pierce it. I mean, we don't have to, but yeah, to me, that's like, maybe we get that this week. Again, maybe we get that late Tuesday low, you know, and then Monday morning, the first half of the day, we burn premium with a little bit of a boost late Wednesday, and then rally Thursday, Friday. Maybe.
Yeah. And then next week being what it is, it's like you could see, you know, risk off profit taking going into, you know, these, and I put this in quotation, these events when you have CPI coming out, you have OPEX, and you have FOMC all in the same week. Those are nutty weeks, really, really wild weeks. And that's next week. And so we have to understand that we're kind of setting the table, setting the stage for what next week shall be, and the potential that lies within it. So thank you very much for walking us through all that. We have no Sunny, but we do have the People's Champ. We do have Stonkington. So Stonkington, paging Stonkington, tell us what you got. Do we not have a Stonkington?
I don't hear the Stonkington.
I wonder if the Stonkington hears the Stonkington.
I wonder if the Stonkington knows we can't hear the Stonkington.
We've been through this before with the Stonkington.
All right. While we wait for him to try to connect, you got anything else that you want to look at? Any other charts you want me to pull up or anything like that?
Well, I think Apple's an interesting one because it just pierced ATH. I think NVIDIA would be another one to kind of take a peek at. And obviously we talked about Tesla, but I think Apple going into this event, as far as, having an idea of where it is, whether or not it can hold a pop, if that's even within the cards for the ticker.
I think we got Stonkington.
Yeah. Bender, I blame you for this. I said check, and right on time you were like, "Good morning, Stonkington." So I was like, "Okay, they can hear me," but apparently you could not. So I'm here. I'm awake. Let's get into some stuff because I found some things that could be helpful to look at this morning. Here we go. All right.
Is it as grand as a Smash the Burger box that you gave us last week? That was pretty grand.
Smash the Burger box. I hope so. I'm drawing a blank on
what is he I don't know what he's referring to.
Yeah.
No, he came in. It was I think it was last week, and he basically said he was reading some book, and they talked about the Smash.
Oh, yes, Smash Day.
Yeah, Smash the Burger box.
Oh, yeah.
Yeah. We got some of that too. We do have a Smash Day potential today. I'll get into that. But here I was just kind of looking. This was one where like Hells jumps in after a half hour of flat, and it's like, are we ready to do something? And it's like, yeah, there's like it's funny, but also it's like, well, there's some truth to that. And then so just kind of wanted to tie that back into some of this price action scalping stuff from Mr. Mel Brooks, and then he's got his buddy Trader Tom with some thoughts here on how you could use this price action to make some money. So the ones that I will be focusing on is when we're stuck in a range, because that's one that Al Brooks focuses on as well, where he says, you can make money, but he doesn't prefer to do it that way. And so just some of the thoughts as far as how it might look. So I kind of split these up into, what do we got? These would be the potential longs, and you can see these are really obviously short scalps. If you went long down here, then you're getting out. You can get out here, and then similarly, if you got was the bull flag I was looking at and calling out on Friday. These are the flags I was looking at. So here's the bottom of the flag. If you got long here, you could get out here, and then. But basically, the idea is you can be taking these scalps, especially on the NASDAQ. It's like if you got long here, you could be done for the day and with a couple contracts. And then I highlighted these blue boxes where it's like, if you were thinking we were stuck in a range, you have to be ready to get out if you're hitting this blue box. Because you can't sell here, obviously you'd get wrecked. So you have to be prepared to be wrong quickly and out. And then similarly, let's see, I think I got the sells. So you could do the same thing here, where you start selling. If you see coming back into resistance, slowing down, you could sell there. You could sell here again. Al Brooks talks about adding too, where it's like if you missed your exit, you could be adding when you have resistance. And then the other one that this was a Trader Tom lesson would be, he calls it buy on close, where I think we'll delete this. But these ones where you have a bar that closes on its highs, you can take the break of the next candle. That would be a good example. Or he also has this sell on close, where it closed below the lows. This can be a sell entry. So just some quick ideas on how you can still scalp in a trading range from what I've been learning from Al Brooks kind of stuff. You just have to be ready for it to be a very quick trade and be aware of where your support and resistance lines are. And then I like to add in those patterns as well. So that's just kind of that was a quick thought, looking at how that price action worked out from the end of last week. Let's talk about smash days. So here's the Qs daily. I have an alert set on this. Where are we? So we do have a smash day in play because Friday closed above Thursday's high, which would mean if we broke below Friday's low, this would be our short entry. Friday's high would be our stop. So that does have potential. We'll get an alert that pops in the room there. So yes, we have a potential smash day on the Qs. We have one on the SPY as well because we've closed above Thursday's high. So if we break below Friday's low, that would be a short entry, and then that would be our stop up there. So we do have that's definitely a potential smash day setup, and we'll get the alerts that pop here in the room. And then let's swap over to kind of chart some of this other stuff out. Let's see. Okay. All right. I'm going to turn off this indicator, but it is showing us where on the NASDAQ, this box right here, that's our new week opening gap. Spender mentioned the importance of that one. What is notable looking quickly this morning at the ES, the Russell, and the NASDAQ is that the NASDAQ is the one out of the three that has not gone back up through this area. So I would expect us to run this at some point this week. Again, like Bender said, we don't know exactly when that might happen, but we have some room up. What is that? 587.75. Over here below, we are holding this order block line, which is this candle where we pushed up and then rejected with an aggressive push down. This is the midpoint of this wick right here. And you can see the importance of this line. So if we pull back, I'll be looking for the reaction here at 533.50. And then zooming out more below, yellow boxes are daily fair value gaps. And then I added orange is going to be their weekly. So if we start pulling back, first downside target would be here. What is that? 426.25. And then this is the rest. You could clearly see this 4-hour fair value gap right there. So we would have down to this 336.50. And then we're still, I kind of adjusted these trend lines here on the NASDAQ. These go way back if we're going to look at this as a big old rising wedge. So that's kind of what I'll be looking for. Definitely interested to see what happens with this new week opening gap. And then you guys mentioning the Russell. Let's jump over to that. Yeah, ridiculous move on Friday. And what's interesting is this line here. You could see how many times this, what is this area right here? 1823.20. So I'm looking for that as a retest. We almost made it so far. So ridiculous move on Friday up, left some fair value gaps behind. And then here's this little small pink box is the new week opening gap, which you can see it already traded through. So I want to watch the reaction to this line. I think, with all the other things that we have going on, it's like, this massive run on tech. I think the small cap stuff is going to be a good focus. I'm going to be watching the Russell. I think there could be a good move continuation to the upside there. I don't know if rotation is the right term, but if, the big money's looking for, tech had this massive run, are they going to be looking to, other things to play catch up, which the Russell definitely was trying on Friday. Let's see. So individual tickers, jump over to NVIDIA. So here I have this marked up. I'm basically seeing what's going to happen. Are we going to have a big old head and shoulders, or is this going to turn into a massive bull flag? This is the big dark pool that we have an alert set, so this will pop in the room. If we cross this line right here, that 378.34, that's 15% of average 30-day from May 31st. So I would be waiting for that to break to take a short, and then I'll be watching this dark pool above 397.70, as well as this potentially forming out into a big old bull flag. So that's what we'll be looking at on NVIDIA. And then if we jump over to Apple, finish off with that. So we had dark pool from Friday, came in at 180.95. And if we look at the 3-minute, this wick, I don't know if that's like a trading view weirdness or whatever, but it looks like that, this is going to be some support that we definitely have to keep an eye on Apple. We could see that big old rising wedge, still got the trend lines on there, still looking like it's operating above. So for continued upside, I'd be watching this, what do we got? 183.30 on Apple. And other than that, just going to watch flow and see what we get.
Yeah, I think flow is going to be really interesting for the week, as it normally is. We did see a decent amount of SPY 435 calls for Wednesday. There are a lot of contracts that came through. They took a lot off, but in the last several minutes of the day, they threw on another 100,000 into that line. So I'm going to be watching to see if those are coming in on the bid. And how they're kind of reacting to those. And as always, the benefit of having these same day SPX lines coming through, extraordinarily helpful. What would you say, Stonk? About 80% of the time, they're right, if not more, as far as direction?
Yeah, I always like seeing those. I don't know what the rightness percentage is, but there was.
This is where you guess, if you were to guess, it would definitely be more than 50% that they're right.
Hey, Hells, we got about 2 minutes to the open, just so you're aware.
Oh, okay, everybody. We have 2 minutes to go, so we're gone. That's it. That's over, y'all. See you tomorrow.
Hope you enjoyed it. See you tomorrow.
All right, catch you guys over there.